Terra Luna Classic has just gone through a 60% correction, but be prepared for a 500% pump. That's right. The price is likely to increase by 500% over the next 4 to 6 weeks. And in today's content, I'm going to show you exactly why. So if you like today's video, like, subscribe, hit the bell notification. Let's dive straight into Terra Luna Classic. Now today we're going to dive into some high level technical analysis. And if you're new, I highly recommend you check out my brand new free The 4 Secrets Crypto Trading Masterclass, because a lot of these elements we're going to be using in the Terra Luna analysis. So this is what the chart looks like with Terra Luna. This is a 60-minute chart. I've gone to the line data just so it's easier for us to see. And the key thing we're going to focus on today is pattern. And we're going to use 3 to 4 degrees of pattern. We're going to look at Fibonacci price ratios as a particular relationship with these waves, because if you've been watching my content the last few weeks, we've been saying, and you would have heard me saying, it's time to take profits with Terra Luna, because the market has been moving in this nice 5-wave structure, and then it just continued up and it continued up, and ideally you would have been trailing your stop loss, and we're anticipating this correction. So we're going to dive a lot deeper into it. So this is what it looked like at the end. This is what we're going to come to as a conclusion. That's right, I've done the analysis already, but I'm going to show you step by step the pattern position, the Fibonacci price ratio position based on particular relationships with the waves, and we're also going to do some Fibonacci time and then what's likely to occur next. Because if this plans out the way it is, we're likely to see an impulsive wave sequence next, and it normally will take out this particular high over here, and that's what we're going to look at. So we're going to look at the method behind the madness. So let's start from scratch. So again, it's a fresh chart, live data. What we're going to do is we're going to start with the pattern position. So what I like to do first is look at the intermediate wave count. And is there a clear wave structure? So just to remind ourselves, markets move in 5s and 3s. And if we see these patterns, it's not all the time, but 50-60% of the time, these patterns are really, really clear, especially in the crypto markets. And that's what we're going to leverage today. So first of all, we're going to start this wave count. It looks like a nice wave 1, a wave 2, a wave 3, a nice wave 4, and this impulsive wave 5. Now, more often than not, wave 5s don't tend to be the most impulsive out of waves 1, 3, and 5. So let me just get this. I just want to get this wave count. I want to change this color to red, just so it's nice and clear for us to see. So normally, in most markets, waves 3 is the longest out of wave 1, 3, and 5. But with FOMO, panic buying, hopium, commodity markets are quite known for this. Wave 5s tend to be the overextended wave. And clearly, this is the overextended wave that we can see. This wave also tends to break down into a 1, 2, 3, 4, 5 in itself. We don't need to go into too much detail with that. What we're going to focus on is really this part of the market. So continuing on the same degree of wave count, do you see a pattern over here with this correction? Well, we've got this first impulse down. That normally is a wave A. Wave A's can be 3 waves or 5 waves. Then we've got this move up, is a correction to the correction. And then it looks like we've got this third wave. This is quite common for an A, B, C style correction. So if we're labeling this, a nice clean labeling would be a nice wave A, pretty clean wave B, and it looks like a 5-wave sequence to the downside for a potential wave C. All right, so now we've got 1 degree of wave count. Now what we're going to do today is we're going to dive in a lot deeper with the wave count, and we're going to go into 3, possibly 4 degrees of wave count so we can really pinpoint what's highly probable to be the end of a wave C correction. Because what typically happens at the end of a wave C is you get a continuation above this high with a particular ratio, and we're going to cover that towards the end of today's video. But remember, if you're brand new to Elliott Wave, in the 4 Secrets Crypto Trading Masterclass, I cover Elliott Wave theory and the real practical side of how to apply this and how powerful it can be. So next what we're going to do is we're going to move to Fibonacci price ratios. We're going to come back to pattern in a second, but we're going to go to Fibonacci price. So the most basic Fibonacci price ratios is a Fibonacci retracement. Most markets, after an impulsive move, correct to particular ratios, and they're pretty common and pretty typical. The minimum, the middle, and then the typical maximum. So there's 3 particular ratios. So we're just going to measure this low. I'm going to do it in line with this low here and this high. We're taking closing data. It does make a bit of a difference taking bar data, the highs and the lows, but this will serve its purpose of what we're looking for. So the three main ratios you want to be aware of with retracements is 50%, 62, and 78.6%. And we can see that the price has gone beyond the 50 and it's hovering around the 62. So we can just get rid of the 50, which is 0.5, and just keep the other two. So now this tells us straight away on a high level glance, the market, Terra Luna Classic, has gone through this 5-wave impulse where the 5th wave has been very impulsive. This is called hopium. Hopium, this over here. You want to be, especially this part over here, be very aware of this. When you're in the market, just trail your stop loss tight to the market because you want to be taking profits in this region. And we should anticipate a correction. You would have seen my previous videos, time to take profits, anticipate a correction is not sustainable. It's just the nature of buying and selling, crowd psychology. So now what we've done is we've got this typical ratio over here. So now what we're going to do is high level Fibonacci time. So we're going to dive back into price in a second into more detail, but we're just looking at the macro picture to see, are we in the range of an end of a corrective trend, and we should see a reversal for the price to pump to the upside? And the answer looks like yes. So what we're going to do now is we're going to look at how long did it take for this to this occur? How long did it take? And we're going to project some ratios ahead of time. It's called Fibonacci time ratios. And most corrections end between 32 to 62%. So 38.2 to 62%. And that's represented by 0.382 to 0.618. So if I just zoom this in slightly like so, you'll see that we've now got this very tight range. Typical maximum price and typical minimum maximum time for a correction. So this tells us that Terra Luna Classic, from a total crowd psychology buying and selling behavior mentality and perspective, that we might be coming towards the end of a wave C correction, right? So now you can see it's pretty logical, pretty mechanical, but we're going to dive into a bit more detail now. And there's a couple of things that we're going to do. Another thing is one of the Elliott wave guidelines. Ralph Nelson Elliott, genius of his time, back in the late 1800s, early 1900s, figured a lot of stuff out. And he had very specific Elliott wave rules, and it defines the crowd psychology, but there's also guidelines. And one of the guidelines is most corrections, and this is what we're referring to as a correction, end in the former wave 4 range. This is the former wave 4 range over here. This is important for us to note because it gives us an extra confluence of events and confidence that this correction is near its end. And because of the optimism of the buying behavior previously, the same buyers are still in town. And they got a bargain down here. A lot of people took profits over here. And now people are getting ready to buy again. So don't be too surprised if we see the next pump. And 500% is what we're looking at. And I'm going to show you why towards the end of today's content. So again, remember, make sure you take the 4 Secrets Crypto Trading Masterclass. It will blow you away. I'm telling you, I'll give you my best stuff. The 4 secrets. We're applying it here. We're applying 3 of the key secrets today. And there's a 4th one as well, which just really changes everything. So what we're going to do now is we're going to go back to pattern. Because what most people don't realize is wave breakdown into subwaves. So what we're going to do is we're going to zoom in over here, and we're really going to pay special attention to this, what looks like to be a wave C. Right? We're going to pay special attention to this wave here. Because if we can narrow down like a tighter range in terms of both time and price, we can more pinpoint the end of a high probability end of a wave C. Right? So wave C's pretty much all the time end in a 5-wave sequence. And what we can see here is an initial move down, up, that's a wave 1, 2. It looks like a wave 3, 4, 5. So we can label that. How we do it is this. Again, I would normally use bar data, but sometimes bars can be a bit noisy. But it's good to know the range of the bars. But closing data, line data can just be easier to visualize. So here we're going to go wave 1, wave 2. Looks like a nice impulsive wave 3, potential wave 4, and it looks like a final wave 5 is occurring. We're just going to draw it here for now. And what we want to do is we want to change the color. So it's clear for us to differentiate between the two. And we also want to change the wave count degree. The first one was at an intermediate. The second one we're going to do as minor. So basically it's a smaller number, and it shows the waves break down. There's psychology within the psychology. And if we zoomed in, it will break down even more. And that's what we're going to do next. Because now what we're going to do, and we're going into detail here. This is like a very high level stuff that we're doing. And again, if you haven't already, do take the 4 Secrets Crypto Trading Masterclass, because they cover Elliott wave theory in this. So if I just kind of get this a bit more precise, look at this is the wave 4. And then what does this look like to us? Do we see a potential 5-wave sequence of some sort on this part, the wave 5 of the wave 5? So wave 5 of the wave C is what we're looking at, the wave 5 of the wave C. So this 5, just like the previous wave C, also tends to break down to a 5-wave sequence. So I'm just going to pull up the bar data again. Just want to clarify a couple of things. We just have to make a few judgment calls on, do we take this high or this high? So we're going to use the intraday data for this. And now we're going to look at this like so. The lower degree time frame you go, then you want to use intraday data in terms of the ranges. And if you're looking at a daily chart and the macro viewpoint, then closing data is actually better because it then eradicates the noise. Noise meaning like wide bars. So now what we're going to do is we're going to count this here. Looks like a nice wave 1, 2, a very impulsive wave 3. More often than not, wave 3s are the impulsive wave. It looks like an A, B, C of some sort, a wave 4. It could be here, it could be here. Doesn't matter too much. The main thing that we want to know is that the low down here tends to get exceeded. So we're going to draw it over here. We're just going to adjust a couple of these over here. And this is high level. We're doing three degrees of wave count here. 3 degrees of wave count. So, and we're going to change the color again. We'll use green. And we'll change it to a microwave count. So again, it just has a smaller denotation on the lettering and the numbers. So what we're looking at here is a very high probability end of a wave C zone from a pattern perspective. We got a wave C, but then we've got a wave 5 of a wave C, and then we've got a wave 5 of a wave 5 of a wave C. Very important. And how you'll denote this, as in label this, is it will look like this. I normally do a wave 5 of a wave 5 of a wave C. Right, just so we got pretty much clarity. The more degrees of wave counts, the better. Now you don't really need to go more than 2. 3 is probably the maximum you want to go. There's no real extra benefit of going 4. We will probably label 4 by the end, and you'll see why. But 3 is more than enough. And this is pattern at its best. So Terra Luna Classic, the crowd psychology is playing out just textbook style. So now what we're going to do is we're going to do a deeper dive into Fibonacci price. We're going to get very, very specific because wave A's and wave C's have a very specific relationship. Wave B's and wave C's in terms of buying and selling behavior have a very particular relationship. And then a 5-wave sequence. When the 5-wave sequence, when we're looking at this over here, this 5-wave 1, 2, 3, 4, 5, and also in exactly the same way, this more micro 1, 2, 3, 4, 5, wave 1 to 3s have a relationship with wave 5s, wave 4s have a relationship with wave 5s, and we're going to use that information to really narrow down a price cluster so we can get very pinpoint accuracy. And then we can really time our buying behavior or buying decision making in a business-like manner. So first what we're going to do is we're going to stick with the red. The red is more the intermediate count, the bigger degree wave count. So we just zoom back out. And again, if you're finding this is frying your brain a little bit, because it is a lot of information, right? I'm going straight in for the jugular. It is very advanced stuff, but everything in life is difficult before it's easy. So I highly recommend, if you're up for it, pause in the description below, check out the 4 Secrets Crypto Trading Masterclass, because this is what I cover. This is what I cover, how you can do it on any cryptocurrency of your choosing. We're just doing it with Terra Luna, and the same methodology applies, whether it's Bitcoin, Ethereum, even if it's Tesla stock, if it's the gold market, if it's the currency markets, this crowd psychology plays out time and time again. So what we're going to do now is we're going to focus on, firstly, this wave A and wave C relationship. So something called a alternate price projection, also known as a extension. Let's just go back to, we'll keep the bar data now. We'll just get used to the bars. Actually, no. But let's we'll stick with this. It's easier for you to see. All right. So we're going to measure this wave A, and we're going to project from this wave B. And the key ratio that we want is 100%. And 100% is represented by the number 1. And we see this red line over here. So this just tells us we are in the range of a typical end of a wave C. Next, what we're going to do is something called an external retracement. It's the relationship between wave B and wave C. This one I am actually going to, because we're going to another degree wave count, we're going to, well, I want to take the range of the intraday data. We have to make a couple of judgment calls on, do we use this wide bar or do we use this one here? I'm going to use this one here because this looks like a news bar over here. So use this low and this high. And it's something called an external retracement. It's basically a retracement that goes beyond 100%. And the key ratios, I need to just make sure I get the right point over here. The key ratios is 1.618 and 1.272. But we can see the 1.618 is over here. All right, so that's like the more intermediate. Now we're going to get a bit more detailed. I'm going to do it a bit faster just for the purpose of today's video, because what we're going to end up with is this. But if you don't know the method behind the madness, this might not be that useful to you. But if you know the method behind the madness, it gives you a bit more confidence in the analysis on what's likely to occur next. So what we're going to do now is we're going to look at the 5-wave structure, right? The 5-wave wave structure. First, we're going to focus on the yellow, and we're going to do 2 key ratios, wave 1 to 3, and the wave 4 relationship. So let's start with the wave 4. It's the same external retracement that we did with the wave B. We're going to take the extreme range. It's the 1.618 and the 1.272. And we can see we've got this nice range over here that's helping us narrow things down. And then we're going to do the wave 1 to 3 relationship. So this is an extension. I know it's a lot. I know everything is difficult before it's easy. I've been doing this for 15 years, hence I can do it quite fast. I used to always do it in the Forex markets, but now mainly focus on the crypto markets. The key ratios for this is 32 and 62%. And we can see we're in that range of the 62%. And that's really relevant for us. So we're just going to take away the 32 because we surpassed that. So this ratio over here is really, really key. And then last but not least, we're going to repeat the same thing for the green. Right, we're going to repeat the same thing for the green. We're going to take the wave 4 range, external retracement. We're going to take the extreme range over here. So this wide bar and this top over here. So you can see we've got this ratio. These two are very key, very reliable, very consistent. So we're going to use that information. And then we're also going to do the same extension. Wave 1 to 3, I'm going to project it from over here. Wave 1 to 3, we'll take the extreme because we're on the intraday data. And you can see that 62% is right in the range of the external retracement. This is really significant stuff, really significant stuff. So now, if we now zoom out from a price perspective, we've really got 2 zones, right? We want to be aware of this. We've got this zone down here, and we've got this zone up here. They're pretty wide, but what typically happens is if price goes through the first zone, it will typically move to the next one, right? And the typical maximum correction is this 78.6. So this tells us that Terra Luna Classic is in this range, and we can really pinpoint it. We could go to a lower degree, but you know, there's pros and cons to going lower and lower and lower. So I don't like to go really below an hourly chart if I don't need to. All right, what we're going to do next is we're going to go back to Fibonacci time. We're going to do a couple of things with Fibonacci time. One of them is wave A's, the time it takes for a wave A to form, has a direct relationship with how long a wave C tends to take to form as well. Most common is 100%, but the one after that is 1.618. And I think that's the one that we're really going to see over here. We just take this low and we project it from over here. We want to look at the 100%, the 100%, and the 1.618. Let's just see where that is. All right, so what this tells us is if this is a wave A, B, C. Now, we don't know. We can only do high probability because there's a couple of other wave counts that we can possibly deduce from this as well. Too early to say. There are a couple, but this is what the high probability wave count is right now. This just says we're beyond the extreme of time which means we are due a impulsive wave. So that doesn't serve any purpose right now. So now what we're going to do is just something called, is a simpler time analysis. We're just going to keep it back here. It's called a low to low to low. Keep it really, really simple. We're basically going to take this low, because the market tends to move in rhythms. And if we can identify the rhythms, it can be very, very helpful for us. This low to this low, and we project that forward, and the key ratio that we want is the 100%. And that's this red line. So now we've just narrowed it down a bit to say we want to be very aware of the date, which is today, but the end of today, right? So we might be very close to the end of a wave C. All right, so we've done a lot of detail today, right? But remember, I break this down in a lot more detail in the 4 Secrets Crypto Trading Masterclass in a much more digestible manner, because I break it down and you'll understand the methodology of what we're using today. All right, so let's finish up on the projections now. The projections. I'm just thinking, is anything else? We got 3 degrees of wave count. By the way, I'm going to do one more degree. This is just more for reference. What you want to know is when you see a 5-wave structure, a 1, 2, 3, 4, 5, there's always a wave count above and a wave count below. And the wave count above for the first wave 5 impulsive sequence is actually a wave 1. And just like the wave 1, this down here, this wave C, is an ABC of what looks like a potential wave 2. And I like to put a question mark down here. So that's why it's 4 degrees of wave count. I don't need 4 degrees, but it's a 5 of a 5 of a C of a wave 2. Why is this important? Well, waves 2 are like a launch pad. And especially when they end in the prior range of the prior wave 4, which is over here. They can act like a launch pad, and then the price springs into action for a wave 3. And more often than not, the wave 3s, like over here, are very impulsive. Like over here, are very impulsive. Like over here, are very impulsive. So we're now looking for the market as a whole to expand. And that's quite typical for all markets, all time frames. So what's likely to occur next? Well, at the beginning, I said 500%, right? And now you're going to see exactly why I said 500%. So now I'm going to zoom in like this. I'm going to just narrow this down like so. All right, so what you want to know, so what we've got here now is now we're doing a macro wave count. We're going, this is the first move up, a wave 1, a second move down, a wave 2, and now we're looking for the next impulsive sequence to the upside, which is what we're calling a wave 3. Now, wave 3s as a buying behavior are typically most common to be 1.618 of wave 1. What does that mean in English? All right, let me show you. And again, I cover this in the masterclass in a bit more detail, in a more digestible manner. But what we're basically going to do is we're going to see what was the price movement of this wave 1. We're going to take that, and we have to make a bit of a judgment call on where do we think the wave 2 is going to be, because it hasn't been confirmed, the end of a wave 2. And then we're going to add 62% onto that. And that will give us our 1.618 price target. However, it's also important to note, especially with what happened with Terra Luna Classic previously, where it overextended, wave 3s can also overextend. And the next ratio is 2.618. So let's just do that so you can really, really see what's likely. Now, we are forecasting here. So it's total forecasting. This has not been confirmed, and it's probabilities. There's no such thing as a crystal ball. But from my experience, the 4 secrets of crypto trading is the closest thing that you're going to ever get to a crystal ball. And that's just the nature of the game. So let's just now look at this. I'm going to take it from over here. So I'm going to take this wave 1 low. We're going to take this high. We're using closing data over here. And we're going to just take it from this. We could guess it from here or from here. I think down here will be more highly probable. And the key ratios that we want are 1.618, which is 162%, and 2.618, which is 262% of wave 1. Now we've got these very two clean, specific, objective targets based on crowd psychology, practical crowd psychology, and what's likely to occur over the next 4 to 6 weeks if this holds as a wave 2, which is likely based on how this unfolded, how this is pretty clean, it's in the time ratios, in the price ratios, etc. And if it takes off, we are more than likely going to see the price reach the zone of 0.001 and possibly overextend even into the range of 0.0015. And that's over a 500% from where Terra Luna is today. And it's probably going to go a bit lower before it goes higher. So there you have it. That was a detailed masterclass in itself, but I highly encourage you to take the 4 Secrets Crypto Trading Masterclass. If you enjoyed today's content, like, subscribe, hit the bell notification, because I want to bring you daily value so we can read the markets of not buying at the wrong time, trailing stop losses to maximize profits, but also waiting for the end of a correction and getting ready to pounce when the fear is the highest. And if it also coincides with a ABC correction of a wave 2, obviously the further degrees of wave counts, with pattern, price, time, and momentum. We didn't cover momentum today, but that's one of the 4 secrets that I cover in the Crypto Trading Masterclass. It becomes a no-brainer. Then it becomes just about capital exposure, risk management, making sure you got acceptable risk management or capital exposure to find out if you're right, and then compound and so on and so forth. Whew, that was a detailed one today, right? Detailed one. So let's finish on a quote from my book. You can actually download my book as well. When you go to my masterclass, it will be on the same webpage that you can download my book. Let's go with. I'm gonna go with chapter 8. I think it's Henry Ford, right? I think it's Henry Ford. Let's have a look. Chapter 8. All right, here we go. Henry Ford. He says the following: "It has been my observation that most people get ahead during the time that others waste." Now, the crypto markets are here to stay. Like any other market, it's just crowd psychology. And that's been going on for hundreds and hundreds and hundreds of years, if not longer. And it's just buying and selling behavior, and people are voting with their buying and selling behavior. You got the sophisticated big boys, the institutions, then you got the retail investors, you got the smart money, the dumb money, and there's all people, just the bulls and the bears fighting it out, and the patterns tend to repeat themselves. So it's your job to sharpen your axe, so when the opportunities arise, you can really win the game of crypto trading. So take the 4 Secrets Crypto Trading Masterclass to upskill yourself to the next level. And I'm telling you, it will blow you away on the mechanics and the method on seeing what we did today, but we broke it down in a lot of detail. So join me tomorrow for some more detailed analysis where we're going to take your trading to the next level.